What's up you guys, it's Vladi B here, and in today's video I want to go over some of the stocks that you should not buy on Robinhood, at least not right now. They're great stocks to have at some point, but right now they're just at their peak price point, and I do believe because the stock market goes up and down all the time like a roller coaster, some of the stocks right now are extremely overpriced, and here are 3 examples of those stocks. So let me start with the first one that this YouTuber recommended to buy. It's called Boston Beer. The abbreviation is SAM. And you can see right now this stock is costing us $956. Okay, I'm filming this as the stock market is open, so I could totally buy this right now and I will pay $956 per share. Let's look. It says that 50% of people are buying this, 36% are holding, and 14% are selling. Let's look at their average volume is only 126k. That means that this is the amount of people that trade that stock. So essentially it's a pretty low amount compared to, well, let me give you an example of Tesla, where you're gonna see that the average volume here is 64 million. So compare 64 million with 126,000. This is a very low amount of people trading this. So if this stock you're gonna buy it for this much money, it may become difficult to sell. However, right now a lot of people are buying, and this is why the price is going up. Let's look at the performance of this over the last 5 years. So you can see here that there was a little bit higher point, 1000. This stock could be good for like a day trader, because you're going to buy and sell. However, to buy this right now and hold, this is just not the time because it is so expensive. Just a few months ago it was only at 800 something. Before that it was 700, 500, right? So less than a year ago it was at 500, and now it's almost double that price. And before that it wasn't even at 500. So the good price for this stock in particular, I'm seeing here on average is about $400. And right now if you buy it this high and something happens to the stock market in the next few months, because right now the economy is so unstable, you're just risking losing all that money, and your stock is going to be worth not as much as you paid for it. You shouldn't follow the herd. You should not follow everything that people tell you to buy, because the prices are extremely inflated. A second example of this would be Apple. So right now Apple is at 130. Although Apple is a good stock to have, we are still seeing that it is at its highest. It is actually the highest it's ever been, 131. It's never been that high before. And here, for that purpose, I opened this chart over here on Google, because an extremely huge downside to Robinhood is they don't have more than 5-year performance of the stock. So here I put in Google Apple stock performance 10 years, and it gives me that chart where you can select maximum. So I can do the 5-year. So this is all I see in Robinhood. Now this is what I'm actually seeing in all time. So you can see that back in 81 it cost 11 cents, 12 cents to own a stock. Can you imagine buying it back then, right? If you're seeing here how low it's always been, right? $18, $30, basically below 100, way below 100. And then suddenly last year in 2020, after the pandemic hit us really hard in March, where everything shut down, they went back to 57, and then they just jumped, like skyrocketed to their highest ever, 130. This to me feels like an artificially inflated stock price, which means I would not be buying that. It looks like in June I bought it for $3, and it's just because I was just getting into it, starting to experiment, and it cost me $88. Now it's 130. So it was a better idea for me to buy. If I had known that it's gonna go this much higher, I would definitely spend more money. I would invest. So if I knew, I would buy a little bit more, and now I would probably sell it when it's at its highest. Around 120, 130 would be a really good time to sell. But in the future, when it goes back to around here, I feel like it still has a good chance to go around $80, $90, where it would be a much better time to invest into this. So this one pays dividends, so that's good. At least you're getting some dividends if you do invest into this. You don't have to feel like you have to invest immediately into everything out there just because you have this access. Just be patient. The next one I want to share with you goes like JKH, iShares Morningstar Mid Cap Growth Index Fund. This is a dividend paying stock that a lot of people recommend buying. You can see that the average volume of this stock is only 36,000. It's very low, so you might get stuck with this. If suddenly the price of this $377 stock goes down, you might have a problem selling it because there's only so many people trading that stock. Now the dividend yield is pretty low, 0.09 is extremely low, and let's look at the performance of this. You can see again at its highest. All I'm really trying to show you and have you pay attention to and notice is that right now most of the stocks are crazy inflated, and it's just like the housing market right now. Everything is extremely inflated. Those stocks are not worth this much. The houses are not worth right now. A house that is normally worth 250 can cost you 350 or 400. This house is just simply not worth this much, and eventually it's going to crash and it's going to go back to what it's supposed to be, and people who bought it at 400, they're going to lose a lot of money unless they hold on to it until the next time it gets inflated again, which will happen. So, and this is what happens all the time, right? It gets inflated and it drops, it gets inflated and it drops, and we're seeing those trends happening over here. Let's say back in 2018, we're seeing the price here at the highest of 237, the highest it's ever been at that point, and then it dropped to 192. So it's a pretty significant drop over here, and then it starts going up. It went back up even higher to 83, and then dropped again to 190, and now it's again climbing up, and it's eventually gonna drop down to here again, at least at 278. But this price of 377 is pretty high considering the dividend yield is extremely low, which means you have to invest a significant amount of money into this stock to be able to get something back from the dividends. So this is why I don't recommend this particular stock along with the other two. There are many others, so hopefully what you got out of this video is to start looking at the overall trend of the stock performance. Let's check JKH over here in Google just to see what it looked like overall. So you see here that back in 2004 is where it started, summer of 2004, and it's been holding around between $60 and $80. So it goes up and down, goes up and down. You can see the general trend is upwards, but you see how it spikes right now. It's just extremely inflated. It almost feels like it's an artificial inflation, because usually it wouldn't do this. It would gradually grow, drop, gradually grow, drop a little bit, gradually grow, and now suddenly boom, it jumps all the way up there, and we don't know what's going to happen. Usually when this happens, often it can see how here it spiked pretty high as well, and then it drops significantly. At this point, if you were here, if you were buying here and then you sold here, you lost a lot of money. So if you bought here at 284 and then you sold 190 because you got scared, a lot of people did that. If you were just to hold on to it, well, you would still make a lot of money. You just had to hold on to it. And this is another thing, another tip that I gotta give you for stock market in general. You have to be patient, turn off your emotions completely, and just look at the overall condition of the company you're investing money into. If this company has been around for many years and it's strong, it doesn't matter if it drops a little bit sometimes, because it's a long-term investment. Now for day traders is a whole different story, right? Day traders, they actually make money on the daily. Let's go back to Robinhood. For example, I'm looking over here, right? What do day traders do? So ideally for a day trader is to buy somewhere over here at 128, the lowest point of the day, and then sell it somewhere around here when it's a little bit higher. And the difference of dollars between the lowest you bought it at and the highest you sold it at is your profit. So for, let's say if I bought 100 shares of this at 128 and then I sold at 131, I'm just rounding it to make the math easier. So this is $3. So 3 times 100 is $300. You could have made $300. This is a huge risk because you don't know what's happening. You're just hoping it's going to go up, and that's what those day traders do. And that's why they sometimes lose a big chunk of money, and they don't really tell you about that as much as they tell you about how much they make. They will always show you the positive sides because they want to attract you to buy their courses, their lectures, and they are just so eager to teach you how to day trade. Just be careful of this because It's not for everyone. Everybody has a different risk tolerance, and you really need to decide for yourself if this is something for you or not. Alrighty guys, so use Google, use your logic and brain, look things up, look at the 10-year performance, and try to look at this general trend to determine whether it's actually a good time to buy or not. Alrighty guys, I hope you enjoyed this video and learned something new today. Don't rush into buying stocks when the prices are at their highest. Be patient, just watch them, be ready to buy when it's a good time.
Alrighty guys, this was Vladi B. I hope you enjoyed this video. Please like and subscribe, and until next time.